Yes, my peeps, what are we saying? Back with another YouTube vid zines. Haven't been too active, lost my FTMO account, so we took a bit of a break. Psychology was not there. Also, I've been working as well, so yeah, we had a little bit of time off. We will get back into the YouTube videos, but today's video we're going to go over fair value gaps. How they can be used, the importance of fair value gaps, and stuff like that, pretty much. So, fair value gap is basically an imbalance in the market. Okay, so let's say we're heading up. We've got a fair value gap right here, which we can just take an example of. I'll also use this as well. It just helps find out fair value gap. So, let's say, where's my pen? So we've got a move like this. Obviously, it's come down. We've got a big move up. We've come down, and another big move up again. Yeah, it's created a fair value gap. The fair value gap is here. Okay. Essentially, what a fair value gap is, just an imbalance in the market where there was no counter move, so there was no down movement while the market was pushing up. All right. As you can see already from this, the market, what it's done is it's pushed up. Get the fuck out of my way. Pushed up, created a fair value gap. The market's come back down into the fair value gap, and you can see a push out of the fair value gap again. It's making its way back in the fair value gap again, which you could potentially take another trade off to the upside. You would have got in on this one if you was 5 minute time frame. Let's have a look. Came down into a fair value gap. You could have potentially got into a long once it touched underneath. Let's see if it would have been a good risk to reward. You could have got a 1-to-1, 1-to-2, not so much. Could put it just under the fair value gap. I mean, if it did break structure. Broke structure here, you could have got in there, stop loss underneath there, 1-to-2 would have been here, 1-to-1, you would have hit a 1-to-1. But that's just kind of a way you can use a fair value gap to place trades off. Basically, you don't really want to, you can use fair value gaps to place trades. I mean, fair value gaps are more used as confluence. So obviously once you've got your strategy, let's say you see, for instance, a breaker structure, which mine would be, which would be here. Breaker structure, pushes up, you see it come back down, taps into the fair value gap, breaker structure again to continue to the upside, which you could have got in and off of the fair value gap. Essentially, a fair value gap is literally just an imbalance in price. We'll see if we can find some more if there's any moves off them. What we will use actually is this harmony concepts, which will just point out fair value gaps on the 30-minute time frame. We'll drop down to the 15-minute. Let's see if there's any here. Okay. So we've got a fair value gap just here, as you can see. Push down, big push up. It looks the exact same as the 30-minute one, which was up here, but GBP USD has just been going up for a bit. So yeah, you can see here, fair value gap, right there. Price pushed up, created a fair value gap. Price went into the fair value gap, pushed up again, come into the fair value gap again, pushed up. Same exact thing here as well, which was that same one. Fair value gap, pushed into the fair value gap, pushed out of the fair value gap. It's so simple. Let's see if there's any more fair value gaps here. Obviously, it's not going to work every single time if you see a fair value gap, but come down to the 5 minutes, see if there's any on 5. Go on to GBP US here. So see a fair value gap here, created it, pushed in, come out, pushed into it again, out. Could have potentially got into a trade here, along. Off the fair value gap, you can put your stop loss underneath, because if it does break the fair value gap, then obviously trade's invalid. You could have got a nice 1-to-5 off that. If it comes back in and you want to chase the highs, that's a 1-to-2. Where else have you got on? Fair value gap just here as well. Pushed in, you could wait for a breaker structure, place a trade. Stop loss underneath, 1-to-2. That's an example of fair value gaps that obviously been touched when they're in grey. These are ones that haven't been touched, so potentially price could come back down and seek out these fair value gaps. Basically just like a spot of liquidity. Price does tend to do that sometimes. But yeah, essentially the fair value gap, what you want to look for when you're going through with candles is, I'll show you now. So a fair value gap up or down is basically a 3-candle pattern. Okay, so you've got 1 candle, 2 candles, Make that a bit longer. 1 candle, 2 candle, and 3. The wicks are important in this. Essentially, you've got 3 candles to the upside. You've got your wicks. A fair value gap is created when the wicks of the first candle, okay, do not touch the wicks of the third candle. Okay, so this gap in between is a fair value gap. Okay, which is an imbalance or whatever you want to call it. So if price was to obviously maybe seek this again, it could come back down, tap into this. Once you're aware of that, you could get a price movement of whatever, break of structure, okay, and you could use that fair value gap then as confluence to basically continue pushing price up. Okay, so a fair value gap, I mean, you can take trades off of it if that's part of it, if that's your strategy. You want to take trades off fair value gaps. I mean, I myself look for fair value gaps as confluences with my trade. So if I see a break of structure and then into a fair value gap and then push out of a fair value gap, I can take a trade off that. Just use that as part of a confluence, basically. So yeah, I mean, in terms of fair value gaps, that's pretty much it. I mean, there's other variations. You got inverse fair value gap. You got a fair value gap that hasn't been respected. So let's say you get a fair value gap like that, and price just bombs straight through. Just comes up, bang bang. Wait a sec. Fucking tool. So price, let's say, comes up, bang, and then breaks straight through it without respecting it at all. You could use that as now inverse fair value gap. So come off like that. Okay, so fair value gap can still be valid, but just in the opposite direction, depending on how you want to trade, basically. So yeah, I'm going to wrap that up. I mean, it's just a short one on fair value gaps. If I've missed anything that you want more information on, then let me know. In terms of this channel, what I'm going to do, I'm just going to pump out just different informations on trading. I might make a different section where it goes through either my trading plan and my strategy, and just give you information on how I trade, or I'm just going to pump out just different little bits of information for you guys to watch and just build your knowledge on trading in general. I mean, you can take this knowledge on a fair value gap and take it over to a demo account and see how, maybe trade your own strategy and see how you would trade off a fair value gap or something, or how you would use it as a confluence to your trade. I mean, I use this just to point out fair value gaps, SMC, structure, and fair value gap. That also gives you these lines here, pivotal points, and gives you the change of character and break of structure, which is just an easier way to, just so you don't have to go and look for it yourself. It's just there. I mean, I also use this as well, Lux Algo, which gives me the sessions. So I've only got Tokyo, London, and Sydney session, which I use when I'm trading instead of just going on market out myself. It's just already there. It just makes it easier. The more simple you can make your trading, the better, basically. So yeah, I'll wrap that video up. I'm going to link all my stuff. Go and look at my TikTok down at the bottom if you want to see any of them videos. I'm more taking a piss on there, to be fair. But yeah, go look at the TikTok. Got my YouTube. Like, subscribe, and I'll catch you guys in the next one. Peace.